Hi, I'm Brian Becker with Richardson Financial, here with my colleague Dan Brown. We're here to give you the second quarter update for 2024. Looking at the quarter, stocks were mixed. U.S. large cap stocks did quite well. The rest of the market, not quite so much. Europe, not as well. Europe, emerging markets was strong. Fixed income had small positive returns. And we're going to dive into a little bit more of what else was going on in the market, as well as a look at interest rates. Dan?
Yeah, thanks, Brian. So as you mentioned, yeah, kind of a bifurcated market as far as returns within the stock market. S&P 500 was the clear leader, up a nice amount, while small cap struggled, international struggled. And if we dig a little bit deeper into the S&P 500, and if we look at sector returns, technology continues to be the clear leader, like it has been last year, year before that, and that really pulled the S&P higher, given the significant weight of the technology sector being by far the largest, and again, had the strongest return. And as far as fixed income was concerned, we saw interest rates decline a fair amount in the month of June, and that basically pushed the fixed income markets higher for the quarter. Main reason being there, investors became optimistic that the Fed could cut interest rates later this year.
Thanks, Dan. Peeling back the onion a little bit more, looking at where these strong returns from the markets are coming from, we're really focused on that mega cap, large growth, US technology centric type of company.
Yeah, so if we look at, why has the technology sector been the clear leader the past 2 years? Much of it is explained by the fact that it's had the strongest earnings growth by far. So we're showing a table here showing both 2024 expected earnings growth and for 2025. And if we look at the technology sector specifically, we'll see that for this year, 2024, and for next year, 2025, it's expected to have the strongest earnings growth. So we think much of the returns that we've seen from the technology sector, for the most part, has been justified by the strong earnings growth. And the other pattern that we noticed is that revenue growth is supposed to go up
Mm.
for that sector fairly sequentially over the course of the year, and that we've seen a pretty strong pattern here of beat and raises. So investors kind of taking that to heart and continuing to project that that's going to continue into the future, namely 2025.
Mhm.
So again, primary message here is we think much of those strong returns that we've seen have been justified by the above average earnings growth relative to other sectors.
Thanks, Dan. Now, looking at the other part of every investor's equation, there's earnings, there's interest rates. Let's talk about rates, right? The Fed Reserve has kept the rates elevated for a year now. Other central banks around the world are starting to reduce them a little bit. Let's give our audience an update.
Yeah, so we had another Fed meeting in June, and as expected, it was widely expected actually, the Fed left rates unchanged. So they've been there now for, at a Fed funds level of 5.25 to 5.5 for a year now. It's starting to become a little bit tight. There's certain parts of the economy that are starting to slow down, namely housing and some construction related stuff. But other central banks are getting going with cutting rates. So in the month of June, we saw the European Central Bank cut rates. Bank of Canada, Bank of England talked about cutting rates sometime this summer. So again, other central banks are getting going as growth is starting to slow down on a global basis. So we don't think the Fed is too far behind, and we still think it's very possible that we'll see the first rate cut from the Federal Reserve sometime later this year.
We've talked earnings, we've talked interest rates. That's all in the rearview mirror. Let's give our audience an outlook. What do we expect to happen in the next coming months? Again, let's talk earnings, let's talk interest rates, and let's talk other things that can influence the markets.
Yeah, so the one thing we've talked about fairly consistently, I think, this year is just the fact that we expect that this soft landing for the economy is going to play out. And we actually think it's playing out right now. A little bit surprised how soft the landing has been. I mean, corporations don't seem like they need rate cuts just yet. I again think parts of the economy are beginning to struggle with the higher interest rate environment. But again, we think that they've held up very well so far.
Mhm.
We talked about earnings growth, being double digits this year and next. Another thing, if we look into earnings growth, we'd expect that other sectors are going to expect to have decent earnings growth here in the second half of the year. So
Mhm.
there's other parts of the economy that should continue to do pretty well. But we wouldn't be surprised if the financial markets kind of rested here. We've had a pretty strong start to the year for
Mhm.
the S&P 500. Basically, we've gotten a year's worth of returns in the first half of the year, first 6 months. So wouldn't be surprised if financial markets took a break here. And we've also got some election uncertainty here with upcoming elections, not only in the US, but also in France and the UK. But again, still an overall fairly optimistic outlook.
Thanks, Dan. So from Richardson Financial Group, I'm Bryan Becker. This is Dan Brown. Thank you for tuning in to us. And if you find value, please share this with a friend.